Okay, do we have Amy and Russell on the line?
Yes, we're here, or I'm here.
Yep, I'm here.
Okay, very good. Well, this is Christine Bruno from Bruno P.C, and we're doing a webinar today on COVID-19, and it's geared towards businesses. This is the first webinar we've ever done, so pardon if we have any mishaps. We have a good number of participants on the webinar, so thank you for joining us. COVID-19 is affecting a lot of the businesses out there. Many have significantly reduced their operations or have halted their operations altogether, and it can be difficult for a business to hang on for a long period of time. The federal government recognizes that and has swiftly put a number of programs in place, which we'll go over many of those here today. And my presentation is not switching over to the next slide. Here we go. Okay. So here's the leadership team. You've got me on the left, and then Russell Stamm, CPA, and Amy Rumrill, CPA, both at the firm here. Russell will be going over the funding options, and then Amy will be going over tax credits and tax deferrals. Then Russell will be coming back on to talk about planning your cash, and then I will wrap it up at the end. There's been 3 major bills passed recently: the Take Responsibility for Workers and Families Act, the Families First Coronavirus Response Act, and the Coronavirus Aid, Relief, and Economic Securities Act, also called CARES. The CARES Act is over 800 pages long, and it was just passed this past Friday. And as well, Tuesday afternoon at 3 o'clock, some of the Treasury just changed some of the rules that came out on Friday. So we had to, in preparing for this webinar, we had to actually change some of the information in our slides last minute. So there's a lot of information to sort through, and it's changing daily. And we'll be getting further details and clarification as information comes to us. So the first thing that I want to get into is to determine the liquidity. Then you want to get cash quickly, and then determine how to best utilize that cash. So the first step in determining your liquidity is to take a look at your existing cash. How much do you have in your checking account, your savings account, your CDs and investments, and take a look at your accounts receivable also. You want to take a look at that list and try and make a determination of which customers are going to be paying you timely and which ones are not, so that you can then project out that cash. You want to take a look at your lines of credit if you have any, and know what your availability left on that line of credit is, so that you know that how much you have accessible to you. On the vendor payables, you want to take a look at those bills and see which ones you can push off. Maybe you can make payment arrangements, particularly with a landlord. You might be able to push those off. And then lastly, you want to see if there's personal funds that you can contribute into the business. So this slide is just an overall caption of getting cash quickly. There's a lot of different items in here. Inside the business, we've got SBA loans that run from $10,000 to $10 million. You can contact lenders of your existing loans and see if they are willing to defer payment. I know a lot of them are doing just that. There are some tax credits we'll talk about, tax deferments. You can contact your insurance agent and see if there's business interruption coverage. I was on a meeting this morning talking with an agent, and he said it's kind of a long shot if your insurance will cover it, but it's worth asking. Outside the business, to get cash quickly, there's new provisions for withdrawing from retirement funds, and also take a look and see if you've got some home equity where you can pull some cash from. There's other items that are not as quick. They're probably a couple months out, but they are new tax rules that have come out for net operating loss carrybacks and accelerated depreciation. And then lastly is unemployment. And on the unemployment, I just wanted to mention that owners of businesses, if they're not working, they can claim for unemployment. The federal government has added $600 to every weekly check from now till July 31st. And Massachusetts has a work share program where, as an example, an employer can take their employees, pull them together, and then have them work a 4-day work week and pay them for that reduced number of hours, and then the unemployment kicks in as a supplemental for that last day of the week. There is also the ability to request from the state to defer, get an extension on making the payments for your unemployment payment. And now I will turn that over to Russell to go over the SBA loans.
Great, thank you, Christine. So a lot of you have probably heard things on the news and talking to colleagues and friends and family about different SBA loans that are out there. And I'll start off by saying that be careful what you listen to, because not everything is accurate. There's been a lot of information floating around that is just flat out wrong, and there's also information that's been floating around that has been changing. As Christine mentioned, they did make a major change Tuesday afternoon to this Paycheck Protection Program, and then even this morning they made another change that was a little bit less significant, but still significant in terms of how we move forward. So this Paycheck Protection Program is what most people are talking about, because obviously it has a forgivable portion to it that really helps out small businesses. This program, this first bullet, 2.5 times your average monthly payroll costs, that was actually one of the changes this morning. So in order to calculate what your maximum loan amount would be, it's now 8 weeks of your average payroll plus 25%. And why they changed that language I'll get to in a minute. But basically this loan is designed to be able to fund your operations so you can keep your employees hired and paid. It doesn't mean you have to hire them back right now. If you've laid people off, furloughed people, that's okay if your businesses are still shut down. When the time comes and this loan can get funded, that's the starting point to measure how much you've paid in wages. So payroll costs here are defined as not only wages paid, but benefits and state unemployment tax. And there is a cap on the wages paid. You can't get funded for any wages paid in excess of $100,000 on an annualized basis. So we have to look at that as well if you have any highly compensated employees. Also under this program, you can defer payments, and those deferrals can be up to 6 months, and those are certainly another option to be able to get back on your feet. You will need to track your eligible expenses so you can qualify them and get them certified for the loan forgiveness, and these funds can only be used for payroll and benefits, mortgage and rent payments, and utilities for the period of March 1st to December 31st. So again, needing the accounting of this will be important so you can qualify it and get forgiven. Another good news, collateral, there is none required and no personal guarantee, which is another good thing on this particular program, and the SBA loan fees are going to be waived. This particular loan, you must apply with your local lender. You can't go through the SBA directly, and these applications are opening up tomorrow for all small businesses and sole proprietors, and then next Friday for independent contractors. There's been a lot of questions as to how you define sole proprietor versus independent contractor, and again, these things are going to be coming out each day with updates. I will say that my discussions with the lenders so far, they're overwhelmed. One of the statistics that I was provided was in 2019, the SBA issued $20 billion worth of loans for the entire 12-month period, and now they're looking to do $300 billion worth of loans in the next 3 months. So the local lenders are going to be overwhelmed. My suggestion is contact them right now, start the dialogue with them, and just try and be ready for when they're ready to take your application. Now, when it comes to the forgiveness, this is something that was the change the other day. Originally, the forgiveness was going to be as long as you use it for those qualifying expenses, they'll forgive the loan. They've put in a caveat now. They measure the 8-week period starting from the loan disbursement date, and all of your qualifying expenses for that 8-week period, including payroll, interest on your debt, rent, and utilities, they will forgive up to 100% of the loan as long as 75% of it is used for payroll-related costs. So when we measure that, there's going to be some other things in terms of measuring your FTEs, so your full-time equivalent employees. Your staffing levels have to remain the same. You can't reduce your staff. You can't reduce your overall payroll by more than 25%. There's other things in there that they'll come out with to clarify. But essentially, you are able to get a good chunk, if not all of this, forgiven over that 8-week period. I expect there to be a lot more regulations coming out and guidance on how to do this, but it's certainly an option. If you fall below the 75%, it doesn't mean you won't be forgiven. It just means the forgiven amount will be reduced. So we have to keep an eye on that. And also, this forgiveness is not considered taxable income. So it is, in essence, free money as long as you qualify. The other thing I didn't mention actually on the last slide, the maximum loan under this program is $10 million, but it's based on that 8 weeks of average payroll plus 25%. And the maximum term used to be 10 years. They dropped it to 2 years, and the rate is 0.5%. So that's actually a good thing there too. I did throw in here just an example of the loan. I did not update it for the latest changes today, but the math essentially you can follow. We can tweak it later. But if your average payroll is $10,000 a week, we're going to assume 4 weeks in a month. Your average monthly payroll is $40,000. So 2.5 times that was 100. Under this scenario now, it's really going to be well, actually it'll be the same thing. 80,000 times plus 25% puts you at the same spot. But $100,000. Then going forward, assuming you keep the same payroll, you get funded on the loan for $100,000. You keep the same payroll. 8 weeks is $80,000, and let's say your rent is $10,000 for the 2 months, and your utilities is $1,500 for the 2 months. So your total qualifying expenses are $91,500. Because your payroll is in excess of 75% of that initial loan funding, then all of that $91,500 could be forgivable, and therefore what's left to be repaid is $8,500 at 0.5% over 2 years. So this is kind of the rough calculation right now. I know they're going to come out with more guidance on this and more examples, and we'll stay on top of that and get that information out when we hear it. So that's the PPP loan. The other loan that's out there is the EIDL loan, the Economic Injury Disaster Loan. And this is something that's been out there with the SBA for a while. And in order to qualify this, you've got to be in a declared disaster area, which I believe on the SBA website now, all 50 states have that, both federally and local declared disaster areas. So everybody should qualify for this. The interest rate on this is 3.75%. If you're a nonprofit, it's actually 2.75%. The maximum loan is $2 million, and the maximum term is 30 years. So this is a loan that you can actually apply for right now. There is a collateral requirement on this if it's over $25,000. But if you don't have collateral, they will not disqualify you for it. They will take collateral if it's available, but they under this now, they will not disqualify you if you don't have collateral. The website there, you can go and apply online right now. It does say it takes a little over 2 hours to do, but it shouldn't. If you have your information ready to go, you can probably get it done in about 15 or 20 minutes. There will be follow-up. But the initial application should be pretty quick. You can also defer payments under this, and at the end of this application, there is the ability to request consideration for an emergency grant of up to $10,000, which I'll talk about. But the other thing is you cannot apply for this loan and the PPP loan and use the funds for the same purpose. So there is going to be some coordination that will need to be done to figure out what's your best option. but you can, if you apply for the EIDL loan, you can then roll it into the PPP loan if you choose to go that path. The emergency grant, this maximum of $10,000, this is designed to get funds in your pocket right away to kind of bridge the gap while you're waiting for the loan to go through. If you get denied on the loan, there's no repayment of this $10,000, a maximum of $10,000, and the $10,000 will get deducted against the forgivable portion of the PPP loan if you decide to convert this over to the PPP loan. So that is something that they say it's supposed to be funded within 3 days. We'll see if that's true or not. I haven't seen any of these get funded yet, but it's coming up on the 3 days now. So the other options that are out there, the Express Bridge Loan, that's a new pilot program they've come out with. There are several pages of regulations on this, and it's something that I would, if you have an existing SBA loan, I would contact your local lender and discuss the options with them on this. There looks like there's a lot of paperwork and things that need to go through this, and again, this is designed to give you up to $25,000 to bridge the gap while you're applying for an EIDL loan. But if you do have an existing SBA loan and you contact your local lender, there are deferral options in there for you to be able to defer up to 6 months. And my understanding is the two options are either deferring principal and interest for 3 months or go to interest only for 6 months. But there are deferral options in there. So just contact your local lender if you have an existing SBA loan, and they should be able to help you through that. I will say again that the local lenders are extremely overwhelmed right now because they're trying to get their head around all of this and get set up to start underwriting and funding these loans rather quickly. So that is the summary on the SBA loans. I did notice there are a couple questions coming through. When I hand it back over to Christine or to Amy, I'll try and answer a couple questions, but we will give you an option on how to submit questions at the end, and we'll be responding after the seminar. So over to you, Amy.
All right, so as with those loan options, there's also been a lot of talk about payroll tax credits and tax deferrals. And what they are trying to do here is encourage businesses, again, to keep employees on payroll. One of the acts passed is the Families First Coronavirus Response Act, which goes into effect as of April 1st, yesterday. This expanded the Family and Medical Leave Act, and it also added some emergency paid sick leave for employees. So now as an employer, you have an obligation to provide paid sick and family leave. However, they've designed this so you're able to recoup 100% of the money paid out for these benefits. So you're able here to keep your employees on payroll, and they're giving you back dollar for dollar for those costs. This is applicable to any employer with less than 500 employees, but there is an exception. So if you're an employer with fewer than 50 employees, you can apply for this exemption, I should say, if you deem it will be detrimental to your business. So to be exempt, they're saying that you have to document that, how it would be detrimental to your business. You have to meet certain criteria that the Department of Labor is going to set forth. And then you also have to be approved by the Department of Labor. There's not a ton of guidance yet as to what all of that means or how they're going to handle all of that. And there's also some conflicting information out there right now as whether or not this applies to both the sick leave and the family medical leave or just the family medical leave. So, I mean, it just gives you a sense of how rapidly they've pushed this stuff out there and how quickly they're changing it. So just stay tuned for more guidance in that area. So how are you going to get these credits? Well, they're going to be credits that are applied to your employer payroll taxes. So when you or your payroll company files your quarterly 941, that's when you're going to take the credit. Or you can get immediate relief by retaining the funds otherwise paid to the IRS. So basically not paying in your employer portion of payroll taxes and instead having those funds available to help you cover the employee pay that you're going to pay out. So basically this is something that you're gonna do on a payroll by payroll basis, and then you would reconcile this when you file your 941s. Can you go back one slide? Okay, so you're gonna reconcile this when you file your 941s. So we've been in contact with ADP and some other payroll providers. As of yesterday, they were still trying to figure out how this was all gonna work with payroll. This morning, I noticed when I was in there running a payroll for another client, they've actually added in some deduction codes. So it's continually changing, and I would just probably recommend you to reach out to your payroll provider and ask some further questions on how this is going to be tracked. Okay, so paid sick leave. So let's jump into this and see who's eligible. So an employee that is subject to federal, state, or local quarantine, this does not cover businesses that are required to close during the pandemic. It's only if they're required to quarantine. So this employee is not sick. They cannot come to work. They have no ability to work remotely, so they would be entitled to this sick leave. An employee who is advised to be quarantined by a healthcare professional, an employee experiencing symptoms of COVID-19 and seeking medical diagnosis, an employee that has to take care of an individual that's subject to federal, state, or local quarantine, or has been advised to self-quarantine. So again, that employee is not sick. They just have to take care of somebody else. Or an employee that has a son or a daughter who's under 17 years of age that they have to care for because the child care center is closed or unavailable due to COVID-19. So those are the employees that would be eligible for this paid sick leave. So the specifics with this, it's applicable to both full-time and part-time employees. Full-time employees can receive up to 80 hours of paid sick leave, and part-time employees can receive sick leave for the standard hours worked or the average hours worked over the course of 6 months. Now, you may have part-time employees that you have not had for 6 months. I'm sure you could take the average over whatever the time frame is that they've been working for you, but they are eligible. Employees can receive up to $511 per day. The max would be $5,110 in total if they meet the paid sick leave eligibility requirements 1, 2, and 3 from my previous slide. So these would be like the employees that were directly affected by the virus. Employees can be paid 2/3 of their normal pay rate up to $200 per day with a $2,000 max if they meet the paid sick leave eligibility requirements for items 4 and 5 from the previous slide. So those are the employees that have to care for a family member. And just a note, paid sick leave has to be used before any FMLA coverage would kick in for people that fall into these categories. So you as the employer will receive 100% credit against your payroll taxes for any of these payments made under the emergency sick leave. And if the credit, this is the good part, if the credit is more than the tax, you can request a refund by completing the form 7200. So they just released that form and we'll link it up on our website as well. But I think basically you fill it out and there's a fax number where you fax to them. And we'll put that information out on our website. So example, say you pay out $5,000 in sick leave. You have an obligation of payroll taxes of $4,500. You can fill that form out and request the $500. And you can do that as many times as you want in the quarter prior to filling out the 941 where it would be reconciled. So the family and medical leave, the employees eligible for this are going to be any employees who have been employed for at least 30 calendar days. And any employees who have to care for children under 17 if their schools closed or their child care providers closed with respect to COVID-19. The specifics with this one, the employees are paid 2/3 of their normal pay rate for up to 10 weeks. So again, the first 2 weeks would be paid sick leave. That would have to be taken first, and then these benefits would kick in. So it provides a total of 12 weeks leave for the employee. The employee is also entitled to reinstatement of their same or similar position after the leave is over. And the employer, you as the employer, same thing, you're gonna receive 100% credit against your payroll taxes for payments made under this. And any credit over the tax, you could fill out the form 7200 and request refund for that. I think they're saying they'll reimburse you within about a 2-week time period. So here's a couple examples, and this is looking at it over just one pay period. So the first employee, they're out because their child's school is closed. So their annual salary is $50,000. Their daily rate would be $192. They're eligible to take you're required, to pay them 2/3 of that pay. So it would be $128 a day. So say they're out for 14 days, April 1st to April 20th. That's $128 a day. That employee would be paid out $1,792. The second employee is experiencing symptoms and they need to self-quarantine. So that employee has an annual salary of $150,000. Their daily rate is $577, but the max is only $511 per day that you have to pay. So for this employee, total payments will be $7,154. So total benefits to these two employees that are taking advantage of this leave is going to be $8,946. You have your payroll tax obligation, not just for these two employees, but for your entire payroll is $6,500. And so the difference would be $2,446 that you would be over, where you would fill out that $7,200 and apply for the credit. So basically what you would do here is you wouldn't make that deposit of $6,500, and then you'd fill out the form to get the remaining $2,400. Okay, the employer retention refundable credit is another one. So this credit is available for employers that close or have a significant decline in revenues due to coronavirus. It's another credit designed to encourage businesses to keep their employees on payroll. So who qualifies for this credit? This is going to be anybody whose operations fully or partially suspended, or if your receipts dropped 50% of or less than 50% of the comparable quarter in 2019, and you can continue to take this credit until those receipts go above 80% of a comparable quarter in 2019. The credit is calculated by taking 50% of qualifying wages paid up to $10,000 in total, so potentially a $5,000 credit per employee. This applies to wages paid from March 13th to 12/31 of this year. And qualifying wages include both wages and a portion of the employer provided healthcare. If you have 100 employees or less, all wages are going to apply whether that employee is working or not. So to obtain this credit, it's going to be the same way as the other credits. It's a credit to your employer payroll taxes. When you file your 941, you can take it either when you file your 941 quarterly payroll tax filings, or you can take it, you can have it immediately reimbursed for the credit by reducing any required deposits of payroll taxes. So same treatment with this credit. The exceptions with this one are that if you have the PPP loan in place, you're not eligible for this payroll tax credit. You can't take both. And you cannot take this credit in addition to the other 3 payroll tax credits. So they're, preventing any type of double dipping here. Just go back for 1 second, Christine. Thank you. So with all of these credits, there's going to be some analysis and some planning as to which credits are going to be most beneficial in your situation if you're eligible for any of them. We really don't have all the answers for all of these credits yet. This stuff, as Russell was saying, and Christine, it's just been rushed through so quickly, and they're still making updates daily, even hourly. Sometimes we're seeing updates come through. So my advice with this stuff, if this is something that you guys are going to be eligible for, is to stay as informed as you can. You want to stay in compliance with this because it relates to employees and it's really important. So just be prepared, read as much as you can, ask as many questions as you can, and document any steps that you're taking, whether you're paying sick leave or not. That's going to be important. All right, so to touch on some of the other tax provisions in the CARES Act that came out, we're not going to go over all of them, but we tried to think of some that related most to our client base, where you can maybe get your hands on some more cash. So payroll tax deferrals. You can defer your payroll taxes, a portion of them. So you can only defer the Social Security portion of FICA, which is the 6.2%. You can't defer the Medicare piece. The deferral period is from 3/27/20 through 12/31/20. So taxes incurred in that period can be deferred. And you don't have to pay them until you have to pay half of them by 12/31/21 and half by 12/31/22. So it's a pretty nice way to hold on to a little bit of cash, but you just want to be cognizant of the fact that these are a trustee tax. You are required to pay them at some point. So you don't want to lose track of the fact that you'll need to make sure you have this money put aside to make these payments at those times. And if you have a PPP loan that's going to be later forgiven, you're not eligible to take this deferral. NOL carrybacks. So an NOL occurs when a C corporation, so not an S corp, just if you're a C corp, if you have a loss for the year. And since you're a C corp and this doesn't flow through to your personal tax return, the loss kind of just gets carried forward until you have profits at some point in a future year to apply it against. So under the CARES Act, they're allowing you now to take that loss and go back up to 5 years and apply any of them as long as the loss arose in 18, 19, or 20. So if you, let's say you had a loss in 2018, but you had profits in any of the prior years, we could go back, amend your returns, apply those losses, and hopefully get you a refund. I'm not sure, Christine mentioned these types of things could take, doing an amendment, it could take a couple months for you to get the refund, but it's not immediate cash, but it's still a great opportunity to utilize some of your losses. And another thing to keep in mind, if you are a C Corp and you're expecting big losses in 2020 and you have the means to push as many deductions as you can into this year, you could maybe think about trying to do that and take advantage of these temporary carryback rules, because once we get past 2020, you're only going to be able to carry your losses forward at that point. Qualified improvement property. So this is another area where there's some potential to file an amendment and get some additional money back. This is a permanent change. So this is fixing an error from previous legislation. It's a permanent change. And now any qualified improvement property is going to be eligible to be fully depreciated if it was put into service anytime between 1/1, so it's going back retroactively. So anytime between 1/1/18 and 12/31/22. So this is if you're a business and you own non-residential real property where they have made improvements to the inside of the building, you could maybe take advantage of this. In retirement withdrawals, so it was mentioned at the beginning that one way to get cash into your business would be to take a distribution on your IRA. And the Act is allowing you to take an early distribution. They're going to waive the $10,000 penalty. They're also going to allow you to pay those taxes that would be due on the distribution. You can pay those over a 3-year period, or you can return the cash within that 3-year period. And just one thing with this, you just have to, the money, if you take the money out, it has to be for reasons related to the coronavirus. All right, so with that, I'm going to hand it back to Russell. He's going to go over best practices on what to do with all this cash you now have.
So you're all probably sitting there saying, what was all of that? That was a lot of information in a very short amount of time. And quite honestly, this is how we're all feeling right now, is just the amount of information that's out there and the constant changes. You know, typically major tax legislation takes months for them to debate, negotiate, and come out with final language. This was rushed through. Those three major legislation packages were rushed through very quickly. So there were errors made in them, and corrections are coming out, like Amy said, almost on an hourly basis. So your head's probably spinning. That's justifiable, but we're here to help. And what we want to do now is try and walk you through, now that you've gone through the process of trying to put some cash into the business, what are you going to do with it, and how are you going to use it? So there's a few things here that you've got to do. And I think the first thing that's important is you've got to examine the source of the funds and determine if there's any spending restrictions. So with some of the loans, there are restrictions on how you use the funds. So you want to make sure that you don't run afoul of any of those rules and jeopardize either the loan forgiveness or anything else. And you just have to understand what you need to do so that everything can fall in line. And all of those rules are still coming out, so stay tuned and we'll get you some more information. The next thing you do really is you've got to identify your critical costs. You've got to look at your expense structure, look at your budget, understand what your fixed expenses are, what some of your variable overhead expenses are, and you certainly have to look at payroll, because a lot of this stuff relates to payroll, keeping people employed, and that's the ultimate goal. So as you're looking at that, you want to prepare a crisis budget, and that really is going to be kind of your, what do you need to spend, and what can you defer, and kind of what's your minimum obligations, factoring in all of these other programs that are out there. And along with that, you've got to develop an employment strategy. You've got to understand who you need to keep on payroll, who you need to rehire, certainly for businesses that are shut down, you know, at that point in time that we can reopen, who do you bring back, and how do you staff your businesses? And this is all going to be prioritizing all of these expenses. Anything related to employment, you know, we have to strongly advise you to consult your attorney, certainly any employment attorney, for the expertise. There's so many rules about employment that are outside of the expertise that we have as accountants, but you want to make sure that you understand all of those requirements legally, certainly for furloughs and layoffs and PTO and things like that. So as you're going through this, the next thing you want to do is you really want to look at a cash flow burn rate analysis. You want to understand how much cash you have right now, when do you expect cash to come into the business, whether it be through revenues, whether it be through loan proceeds, tax credits, personal funding and contributions, any of that stuff. And then when are your expenses going to be, any of your cash outflows, when are they going to be due, and when do you have to pay them, to understand what you have and how long that cash is going to last. And we've got some tools that we can share and we can post to our website that'll show a lot of this stuff and help you through it, and we can certainly help guide you through that. But through all of this, you also have to track all of these expenses so that you know what to apply for when it comes down to either the loan forgiveness or tax credits or things like that. So it's going to be very important to have a solid set of books that you can tap into. The banks are going to need it. The IRS is going to need it. Everybody's going to need it. So keeping all of that stuff in good working order and kind of working through the priority of your expenses to understand how long your cash will last is going to be important. We did put on a slide here that just kind of shows you a sample cash flow projection. You know, we'll try and upload another tool that you can use. We'll put it up on the website, and hopefully that'll help you put something together that's tailored towards your business. But it's a very detailed thing, and it'll take some time. And with all of that, I'm going to actually turn it back over to Christine, and she will take it from here.
All right, thank you, Russell. So how can we help? Going through all of these pieces in the webinar, we can assist in calculating your liquidity and preparing the budget, and then most importantly, doing that cash flow projection. How much cash do you need, and how many months is the cash going to last for you? We can also assist in determining the best use of those SBA options. It can be confusing. You can't intermingle some of these programs from one to the other. For instance, you can't take the payroll tax credits if you have a PPP loan. You also, on the EIDL loan, it can be used for all operating expenses, whereas the PPP loan is mostly just for payroll. So determining which is the best program for your business is something we would analyze. On those tax credits, we need to determine the value of them. Are they applicable to you? And if they are, how much money will they really put in your pocket? And then lastly is helping you track those qualified loan forgiveness expenses. So we are here to help in any way we can. We can offer a discounted rate to those who would like assistance. For those who want to do this work on their own, we have a lot of tools on our website. The first things that you want to do right away is get that SBA loan application in. We've got a link on our website to the SBA site for you to do that. you want to evaluate that existing liquidity and get that budget and cash flow projections going. The other items, we've put a new page on our website dedicated just to COVID-19 information. There's FAQs on there. There's guides on there that are worth looking at. There's a guide that has a comparison chart of the loans. The PPP application is on there. It's only 2 pages long. There's other SBA forms that we've put out there, and that link to the SBA on the EIDL loan I mentioned is out there too. There's key points on the loans and tax credits, and we're also going to be putting a recording of this webinar out there shortly. One other item I wanted to note is just for everybody to be careful about phishing emails that are coming out, and they are saying they are the link to the SBA COVID-19 loan applications, where they're getting people to fill their personal information out. So you want to be careful and make sure you go to the correct site. And also in that realm, the stimulus checks that are coming out to individuals, there are fraudsters that are presenting themselves as IRS agents calling to verify personal information. So be careful of that. The IRS will not call you for your personal information. And I think if anybody has any questions, please email us at info@brunoaccountants.com. Right now, we're supposed to be in the heat of tax season, and we've shifted our focus to be just concentrated on what businesses need today. So we'll do our best to get back at you. We're going to be triaging that info at account and trying to address everybody's concerns very quickly. So I hope this webinar has been helpful to everybody, and thank you for attending the webinar, and we hope you have a wonderful day. Thanks, everybody.
Christine, before everybody goes, I just want to just throw out one last thing here. I've been trying to answer as many of the questions that people have put into the chat window. So if I didn't get your question, I'm going to go back through and make sure that we've gotten those questions answered. Some of the questions that have come through have been asking about the copies of the presentation. So we'll look to put that up on the website along with the recording of this webinar when it's all done. And you know, all the other questions, we will work to get those responses out to you if we didn't already do it in the chat.
All right. All right. Thank you very much, everybody.
Thank you.
Thank you.